Welcome to Yadnya Investment Academy. Today we are going to talk about systematic investment plan, which is popularly known as SIP. Systematic investment plan is a financial product offered by mutual fund houses wherein you invest a fixed amount on a monthly or quarterly basis in the mutual fund of your choice. Whenever you start your SIP, you can do it for a fixed duration or you can start a perpetual SIP. In perpetual SIP, you can later decide when you want to stop it. Now, when we are talking about SIP, we are saying that we will invest a fixed amount on regular basis, that is on a monthly or quarterly basis. And this is for our long-term goals, which are more than 5 years away, like a child's higher education, our retirement planning, etc. Whenever we are looking at such long-term goals, equity is the asset class you should invest in. And here we are talking about SIP. So here we are going to see how SIP into equity mutual fund serves as a vehicle for us to comfortably reach our financial goals. Now what you see in front of you is the graph of Sensex, how it has moved from 2006 till today. The horizontal axis shows the time, that is from 2006 to 2016, and the vertical axis shows market level in multiples of 1000. Now the blue line here plots how the market has been moving from 2006 to 16. We have this preconceived notion that equity as an asset class is a volatile asset class, and we listen to this Sensex going up, coming down in the news, and we concentrate more on this blue line, and what we fail to notice is in the long term, equity would give rising results, which is evident from this graph because this is a graph of our own Sensex from 2006 to 16. So if somebody had an SIP over here, the investment would be done at each stage, in the highs, in the lows of the market. And the ultimate result would have been a steady rise in the returns. Let's look at the returns of SIP in the last 20 years had you invested into equity large cap funds. Now when I say large cap funds invest into large cap companies which have established themselves into the market over a long period. An SIP of 5 years into good large cap funds would have given returns of about 13 to 15% on an annual basis. If you had an SIP of 10 years, you would have received returns about 12 to 14% on an annual basis. And in case you had an SIP of 15 years into a good large cap fund, you would have received returns about 17 to 19%. And an SIP of 20 years would have given returns of about 19 to 21% on an annual basis. So what we've seen so far is how SIP is a mutual fund product where you can invest a fixed amount at regular intervals. We've also seen the actual returns of SIP over a period of 20 years. We have seen how not to look at the market ups and downs in the short term, as SIP is a long-term investment vehicle. Hope you have a fair idea about SIP now. Thanks for watching the video. Watch this space for more such topics. Until then, happy investing.